Every month you send that HOA check and wonder where the money actually goes. In Arizona, those fees fund way more than you think, and some of these expenses might shock you. We're breaking down every single thing you're paying for, counting down from 10 to the one expense that eats up the biggest chunk of your money. By the end, you'll know exactly where every dollar disappears to. At number 10, we have administrative and office expenses. This covers all the boring but necessary stuff that keeps your HOA running each day. Office supplies, computer systems, software subscriptions, printing costs for those violation notices you hate getting, and postage all come out of this budget category. Many Arizona HOAs maintain actual physical office spaces where you can meet with board members or management staff. That means the association pays rent or mortgage costs, utilities for keeping the air conditioning running in that office, and all the equipment inside. Professional management companies also get paid partially through this administrative category for their behind-the-scenes work. They handle vendor coordination, make sure the HOA complies with Arizona's Planned Communities Act and Condominium Act, and deal with all the paperwork so volunteer board members don't have to. The administrative budget also pays for accounting software that tracks every dollar the association spends and collects. Banking fees and payment processing costs for homeowners who pay online add to this expense. Without proper systems in place, financial chaos would follow quickly. This category might not be glamorous, but it's the foundation that allows everything else to function properly. Think of it as the engine room of your community. When administration breaks down, every other service suffers because nobody's coordinating the work or tracking the money. Most homeowners never see this work happening, which is why administrative costs feel invisible. But try running a community without organized records, vendor management, or financial tracking. You'd have chaos within weeks, and nobody would know where the money went or what bills needed paying. Administrative expenses typically represent a smaller portion of your total fees, but they enable all the visible services you actually use. Without this operational backbone, your community would collapse. Now let's move to something you can actually see and probably worry about in Arizona. Coming in at number 9 is pest control services. Arizona's desert environment creates serious pest problems that affect the entire community. Scorpions, termites, fire ants, cockroaches, and rodents are everywhere, and your HOA pays professionals to treat common areas regularly. These treatments happen around clubhouses, along perimeter walls, near community pools, and in landscaped areas where pests tend to congregate. The goal is creating a protective barrier that benefits everyone. Without regular pest control, you'd see infestations spreading from common areas directly into individual homes. Termite control deserves special attention because these destructive insects can cause massive structural damage to community buildings, shade structures, and even perimeter fencing. The dry climate means termites often go undetected until the damage becomes extensive and repairs cost tens of thousands of dollars. Preventive treatments and regular inspections cost money now, but save the community from financial disaster later. Some communities also run rodent control programs, especially in areas near natural desert preserves where coyotes, lean us, and rabbits venture into developed areas. While individual homeowners are typically responsible for pest control inside their own units, the HOA's efforts in common areas create that protective barrier around your home. Think of it as the first line of defense. The treatments in shared spaces reduce the pest pressure on every individual property. Pest control contracts usually run year-round because Arizona doesn't have a true off-season for insects and rodents. Summer heat drives pests to seek water and shade in landscaped common areas. Winter brings them looking for warmth. Your fees keep this protection active constantly. Most residents don't think about pest control until they see a scorpion in their garage or termite damage on a fence. By then, the problem has already grown. Your HOA fees fund the prevention that keeps these desert creatures from becoming a bigger issue for the whole community. At number 8, we have security and safety services. Many Arizona HOAs, particularly in gated communities and larger master plan developments, allocate huge portions of their budgets to security measures. This can include staffed guard gates with 24-hour security personnel and vehicle patrols throughout the neighborhood, surveillance camera systems at entry points and common areas, emergency call boxes in amenity areas, and sophisticated gate access systems all fall under this category. In the Phoenix metro area and Tucson, where crime rates vary significantly, by neighborhood security services are often one of the most valued HOA amenities. Gate access systems require regular maintenance, software updates, and replacement of worn equipment like keypads, card readers, and automated gates. Many communities have transitioned to app-based access systems that allow residents to open gates remotely or provide temporary access codes to guests and delivery drivers. That technology convenience adds subscription costs to the budget every month. Security also covers lighting in common areas, which is particularly important in Arizona, where people use outdoor amenities year-round. Well-lit pathways, parking areas, and recreational facilities deter crime and reduce liability risks for the association. Some HOAs also budget for neighborhood watch programs, security assessments by professional consultants, and coordination with local police departments for enhanced patrols. The cost of 24-hour manned gates can run into six figures annually when you factor in wages, benefits, and scheduling for continuous coverage. Vehicle patrol services add another layer of security, with guards driving through the community at random intervals throughout the day and night. This visible presence discourages theft, vandalism, and other criminal activity. The monthly expense varies based on patrol frequency and whether guards are armed or unarmed. Security represents one of the biggest differences between HOA living and non-HOA neighborhoods. Your fees directly fund the peace of mind that comes with controlled access and active monitoring. For many residents, especially families and retirees, this expense justifies a significant portion of their monthly payment. But number 7 is where things get expensive in Arizona. Pool and spa maintenance becomes a huge ongoing cost because the intense heat makes community pools one of the most heavily used and appreciated amenities. Pool maintenance includes daily chemical balancing, cleaning, filtration system operation, and compliance with Maricopa County and other local health department regulations. Professional pool service companies typically visit multiple times per week to test water chemistry, add chlorine and other chemicals, vacuum pool surfaces, clean filters, and ensure all safety equipment functions properly. The extreme Arizona sun causes faster degradation of pool surfaces, tile, and equipment compared to cooler climates. Resurfacing pools every 7 to 12 years is a major capital expense that HOAs must plan for through reserve funding. Pool equipment, including pumps, heaters, filters, and automation systems, require regular maintenance and eventual replacement, with costs running into tens of thousands of dollars for commercial-grade equipment. Many Arizona communities have multiple pools, splash pads for children, and hot tubs or spas, which multiplies these costs dramatically. Water evaporation is another significant expense. Arizona pools can lose up to 2 inches of water per week during summer months, requiring constant refilling at your community's expense. Additionally, HOAs must budget for lifeguards, if required by community size or local regulations. Pool furniture and shade structures that withstand intense UV exposure, and liability insurance, specific to aquatic facilities. The chemical costs alone can run thousands of dollars monthly for larger pools, because the heat accelerates chemical breakdown. Pool maintenance is one area where cutting costs creates immediate problems. Algae blooms, cloudy water, equipment failures, and health code violations happen quickly when maintenance lapses. Your fees keep those pools sparkling clean and safe for your family to use nearly year-round. Pools are often the amenity that sells people on HOA communities in Arizona, but they're also one of the biggest ongoing financial commitments. The monthly expense never stops because the pools never close. Even in winter months, equipment must run, and chemicals must be balanced. At number 6, we have utilities for common areas. Common area utilities represent a significant ongoing expense for Arizona HOAs, particularly during the scorching summer months when temperatures regularly exceed 110 degrees. Electricity costs for clubhouses, fitness centers, pools, and landscape lighting can spike dramatically from May through September. Air conditioning and pool equipment run continuously during these brutal months. Many communities have outdoor lighting systems that illuminate walkways, parking areas, and amenity spaces from dusk to dawn, contributing to substantial electric bills year-round. Those security lights we talked about earlier all need power. Water usage in common areas is particularly expensive in Arizona due to the arid climate and limited water resources. Irrigation systems for common area landscaping, operation of community pools and water features, and even evaporative cooling systems in older clubhouses all consume significant water. This isn't a small expense. Many HOAs have invested in smart irrigation controllers and drought-tolerant landscaping to reduce water consumption, but costs remain high. Gas utilities may be needed for pool heaters, spa heating systems, and clubhouse facilities. Some larger master plan communities also pay for trash collection services for common areas. Internet and phone services for management offices and amenity facilities add to the utility burden. Sewer services for clubhouses and pool bathrooms round out this category. In communities with extensive amenities, monthly utility bills can easily reach several $1,000s, and during peak summer months, those bills can double. Utility costs are one area where conservation efforts directly benefit all homeowners. When the HOA reduces electricity or water usage through efficiency upgrades, everyone's fees can potentially decrease. Smart thermostats in clubhouses, LED lighting conversions, and water-efficient irrigation save real money over time. This expense category fluctuates seasonally, which is why HOAs budget based on peak usage months. Planning for the worst-case scenario ensures the association can cover August electric bills without emergency assessments. Your monthly fees smooth out these peaks and valleys throughout the year. Coming in at number 5 is common area repairs and maintenance. Beyond routine cleaning and upkeep, HOAs must budget for ongoing repairs to community facilities and infrastructure. In Arizona's harsh climate, this category takes on special importance because extreme heat, intense UV radiation, monsoon storms, and occasional winter freezes accelerate wear and tear. Clubhouse maintenance includes HVAC system repairs and filter changes, plumbing repairs, roof maintenance, and leak repairs, door and window replacements, and interior updates to prevent facilities from looking dated. Playground equipment requires regular safety inspections and repairs with rubber surfaces and plastic components particularly vulnerable to sun damage. Tennis courts, basketball courts, and pickleball facilities develop cracks from ground settling and temperature fluctuations requiring periodic resurfacing. Perimeter walls and fencing are subjected to constant sun exposure, monsoon winds, and occasional vehicle impacts necessitating regular repairs and repainting. Walls fade and crack faster here than almost anywhere else. Parking lot maintenance, including pothole repairs, restriping, seal coating, and speed bump installation, falls under this category as well. Gates and entry systems require frequent adjustments and repairs due to heavy daily use. This budget category often includes emergency repairs when a monsoon storm damages a ramada structure or a pipe bursts. Funds must be available to address problems immediately, because delaying repairs usually makes them worse and more expensive. A small roof leak ignored for a month can cause thousands in water damage. A cracked tennis court left unrepaired develops into a safety hazard and liability issue. Maintenance and repairs represent the difference between a community that looks well cared for and one that appears rundown. Property values directly correlate to how well the HOA maintains common areas. Buyers notice peeling paint, cracked pavement, and broken amenities immediately during property tours. Your HOA fees fund the constant attention needed to keep everything looking good and functioning properly. This isn't optional spending. It's required maintenance that protects your investment. Communities that defer maintenance to keep fees artificially low end up with special assessments later when everything breaks down at once. At number 4, we have landscaping and groundskeeping. Landscaping represents one of the largest ongoing expenses for most Arizona HOAs because maintaining attractive, healthy vegetation in the desert requires constant attention and significant water use. Professional landscaping companies typically service HOA common areas weekly or bi-weekly. They provide mowing, edging, pruning, weed control, debris removal, and seasonal planting. Many Arizona communities feature a mix of desert landscaping with native plants and traditional grass areas, each requiring different maintenance approaches. Grass needs frequent mowing and heavy watering, while desert plants need careful pruning and controlled irrigation. Irrigation system maintenance is a critical component of landscaping costs in Arizona. Drip systems for desert plants and sprinkler systems for grass areas require regular inspections to identify broken heads, leaks, and clogged emitters. Water waste from malfunctioning irrigation can be expensive and is often targeted by local water conservation regulations. Tree trimming is another major expense, particularly for communities with mature palm trees, which require specialized equipment and certified arborists to trim safely. Palo verde, mesquite, and other desert trees also need regular maintenance to prevent limbs from interfering with power lines or structures. One palm tree trimming can cost several $100s. Seasonal considerations add to landscaping costs. Winter frost protection for sensitive plants, spring cleanup after trees drop seeds and debris, monsoon season storm damage cleanup, and autumn leaf removal all require additional labor. Many HOAs also budget for landscape improvements, replacing plants that have died and adding seasonal color with flowers. Weed control is an ongoing battle in common areas, and communities must choose between chemical treatments, manual removal, or accepting a certain level of natural desert vegetation. Ground cover, rock replacement, and maintaining clean, attractive landscape beds round out this substantial budget category. Rocks fade and scatter, requiring periodic replenishment. Landscaping is often the first thing people notice when driving through a community. Well-maintained grounds create positive first impressions for buyers and make residents feel proud of where they live. Your fees fund the crews who show up every week to keep everything looking sharp regardless of the season. But number 3 is where your fees protect you from financial disaster. Insurance premiums are legally required and financially smart expenses that protect both the HOA and individual homeowners from catastrophic losses. Arizona HOAs typically carry several types of insurance coverage, with premiums representing one of the largest fixed costs in the annual budget. General liability insurance protects the association from lawsuits related to injuries occurring in common areas. If someone slips by the pool or trips on a walkway, the HOA could face a lawsuit. With Arizona's litigious environment, adequate liability coverage is essential, and many HOAs carry policies with limits of $1 million or more. Property insurance covers community buildings, amenities, and common area structures against damage from fire, vandalism, storms, and other disasters. In Arizona, this includes coverage for monsoon wind damage, hail and water damage from burst pipes or roof leaks. Directors and officers insurance protects volunteer board members from personal liability. This coverage is crucial for recruiting and retaining board members, because without it, nobody would want to serve. Fidelity bonds protect against theft or embezzlement by board members, or management company employees who handle HOA funds. Some communities also carry umbrella policies for additional liability protection. Workers' compensation insurance. If the HOA directly employs staff, and earthquake insurance in certain areas round out the coverage. Insurance costs have risen significantly in recent years across Arizona due to increased claim frequency, litigation trends, and higher reconstruction costs. HOAs with amenities like pools, playgrounds, and clubhouses face higher premiums. The age and condition of community facilities also affects insurance costs. Older buildings with outdated systems may cost more to insure or may face coverage limitations. Without adequate insurance, one major incident could bankrupt the entire association and leave homeowners facing massive special assessments to cover damages or legal judgments. Insurance feels like a waste of money until you need it. Then it becomes the most valuable expense in your entire budget. Your monthly fees include this financial protection that shields you from scenarios that could cost hundreds of thousands of dollars out of pocket. At number 2, we have reserve fund contributions. Reserve funds are essentially the HOA's savings account for major repairs and replacements that occur infrequently, but require substantial capital. Arizona law requires HOAs to maintain reserves or formally waive reserve requirements with a vote of the membership. Responsible communities fund reserves adequately to avoid special assessments when major projects arise. A professional reserve study, which most HOAs conduct every 3 to 5 years, analyzes the expected lifespan and replacement cost of all major community components. This includes roofs, parking lot paving, pool equipment, HVAC systems, perimeter walls, and gate systems. The reserve study creates a funding plan that spreads the cost of these eventual replacements over many years through monthly contributions. For example, if a community pool will need resurfacing in 10 years at an estimated cost of $50,000, the HOA should be contributing approximately $400 per month to reserves. Arizona's climate accelerates the deterioration of many building components. Roofs may last 15 to 20 years instead of the 30 years typical in milder climates, and pool equipment wears out faster due to constant use and heat exposure. Underfunded reserves force HOAs to implement special assessments when major repairs become necessary. This could cost you thousands of dollars all at once with little warning. Conversely, well-funded reserves protect property values by ensuring the community can maintain its facilities in good condition. Reserve contributions typically represent 10 to 30% of HOA fees depending on the age of the community and the extent of amenities. Newer communities may have lower reserve contributions initially, but should increase funding as buildings age. Reserve fund adequacy is one of the key factors lenders and buyers examine when evaluating a property in an HOA community. Buyers ask for reserve studies during due diligence because underfunded reserves represent hidden financial risk. Your monthly reserve contributions might feel like money disappearing into a black hole, but they're actually protecting you from financial shocks down the road. Communities with strong reserves handle major projects smoothly, while underfunded communities face turmoil and conflict when expensive repairs become unavoidable. This is long-term financial planning in action. But number 1 is where everything changes. Management company fees represent the single largest expense in most Arizona HOA budgets, often consuming 20 to 40% of total revenue. While some smaller communities are self-managed by volunteer boards, the majority contract with professional firms that specialize in HOA management. These companies provide essential services that would be nearly impossible for volunteer boards to handle alone. They enforce community rules and architectural guidelines, collect monthly assessments and pursue delinquent accounts, coordinate maintenance and repairs with vendors, respond to homeowner questions and complaints, and organize board meetings and annual meetings. They maintain financial records and prepare budgets and ensure compliance with Arizona HOA laws and regulations. Management fees vary widely based on community size, amenity levels, and service scope. A small townhome community with 50 units might pay $1,500 to $3,000 monthly, while a large master plan community could pay $10,000 to $20,000 or more. Full-service management typically includes an on-site or assigned community manager, who serves as the primary contact, administrative staff, who process payments and correspondence, and accounting professionals who manage budgets and financial reports. The value becomes apparent when considering the alternative. Volunteer board members would need expertise in contract law, accounting, landscaping, and pool chemistry. Management companies bring economies of scale by maintaining relationships with preferred vendors who offer competitive pricing and utilizing specialized software for violations tracking and accounting. They provide continuity when board members turn over. Many also offer emergency response services, online portals where homeowners can pay fees and submit requests, and mediation services for neighbor disputes. While management fees are substantial, they generally provide good value by protecting property values, preventing costly compliance errors, and allowing board members to focus on policy decisions rather than operational details. Without professional management, most HOAs would struggle with basic functions, and legal compliance issues would multiply quickly. So there you have it. Every single expense hidden in your HOA fees, broken down from administrative costs to that massive management company payment. Now you know exactly where your money goes each month, and why these fees exist in the first place. Understanding these costs helps you evaluate whether you're getting good value for your investment.